Yeah. It's okay
Yeah.
for me to take few sips of coffee in between, right?
Of course, this is just a conversation, and we are live now. And I want to welcome everyone that I know look looks forward for these learnings from our SaaS from Scratch sessions. I'm Vani Kola from Kalari Capital, and I'm really excited for today's segment to have Nilesh share, founder and CEO of LeadSquared, share his own very unique journey to become one of the SaaS unicorns from India. I think it's amazing to see the kind of growth in the last uh, 10 years or so, I think, Nilesh, that you have created in what is not really an emerging space, so to speak. CRM is not new. It's been around for 30 years. And, the 0 to 1 journey for most founders is a bit of an enigma. So, though you have done a lot of different things, that's where, we'll try and have most of our conversation. So, thank you, Nilesh, for taking the time today.
Thank you so much, Vani, and Kalari Capital to organize this show. I think it is. I'm glad I'm able to join and contribute to what you're trying to do.
And I know you're traveling, and I know it's 5:30 a.m. for you, and all the more the dedication to pay forward and have this conversation with this audience. I really appreciate it, Nilesh. But I want to go back to the sort of what I said a few minutes earlier. CRM by itself is not a new space. Obviously, you are very successful in it. And so, how do you find white space within something that already has solutions in the market? How did you approach that, and why did you decide to do CRM?
So I think some of that honestly happened. All cannot be planned. I would think. In fact, a lot cannot be planned. So I think the first is when we started in India, uh, some of the problem statements which are you know which are which which are very common simple problem statements, they were unsolved 10 years ago. I mean, and I think they continue to be in parts unsolved, I would still think, right? I mean, and I think so. That was A, which is like simple things like getting your leads in order, making sure that they are followed up, right? Now, all of this may seem very simple for most businesses to just do it, but unfortunately, getting a system in place, getting it up and running is still a lot of work for most companies and most businesses. And for us, the timing was could not have been better, I would think, given when we started the company and how the entire investment cycle in startup started like 10, 12 years ago, right? So I think there was this timing match of what businesses wanted to expand and build and build scale. So that was kind of co-terminus in some sense to what when we started, right? And we just caught on to that wave, basically, and kept solving the problems which came in front of us. Initially we started with a more simple concept to serve small businesses, but then later on the whole journey changed when we saw the opportunity that it is much bigger than what we earlier thought of. And I think that like one thing led to the other, but fundamentally what worked for us is the timing, especially in India when the digital wave was sort of and continues to grow strong, right? And B, one cannot forget that CRM is a very, very large space, right? I mean, and in a large space there will always be problem statements which the existing players would not have solved otherwise. Customers won't be calling other players. And A, B, and C is the CRM space is also growing in variety of aspects, and new type of solutions around customer experience, etc., kind of coming in. So the space is growing. It's a very large space, and a lot of unsolved problems which exist, and all of that sort of combined for us in some sense with the growth in digital ecosystem, which was to be seen in hindsight, 2020, 2013, 2014, 2012, like that time frame. And that just kind of worked for us, I would think. There's a lot of luck which played for us.
Nilesh, luck is great, and we all need that. And I appreciate that humility and modesty. But neither were you the first company in CRM, nor were you when you even when you started almost 2 decades from the Siebel Systems and others who started in their 90s. Okay, so and there was been wave and wave of many companies, but many of them have not reached the scale that you have. So there is something, and we all want the magic sauce, you see. That's why we get on these conversations, and we take a little bit of fairy dust from others when we have these conversations, something that triggers us, inspires us. So the question really is, what were the things that clicked for you? Because magic, luck is not a recipe, but there are some things you did right. It isn't even that when you started, right? 2011, if I remember correctly, right? That you were the only one around,
Yes.
right? So there is some principles, some things that you followed a script that worked. Not to say the same thing will work again and again, but nonetheless, what is it that you did right, in your opinion, right? Top five things you did right.
Uh, so I think the first I mentioned was the timing of it, right, which I think was important. Second was, in early journey of your company, if you find a few anchor customers who sort of grow faster than much faster than others. We had those customers for us, right? And so while we supported them in their journey, it was a evolution for our product in that space, right? So it allowed us to scale very, very fast, allowed us to build a better product, for the market, right? So I think that was the second thing, is to get those customers for us. Uh, Baiju's was that customer. I mean, I should say that. I know there's a lot of news around, but they grew really rapidly, and there were others also in education space which we served, which also grew very, very rapidly, and that was one important thing, I would think. The second is, I think the overall space uh, was underserved, which means that, so two things. One is was underserved on the following aspect, that the appetite in, especially in the Indian companies, to buy something and then get a third party consultant to then come and implement and then create this project plan for like 12, 14, 24 months, is not something it is for people to do, especially when your business is relatively complex, which means there are certain process hoops to create, manage, maintain, etc. So I think that was overlooked by, let's just say, by our competition, right, at that time. Third is, uh, we were more successful in businesses who were selling to consumers at high velocity, right? So there, if you are a high velocity business selling to consumers, you would like the entire business to be sort of operating together, right, from start to finish, and it requires a lot of work, I would think, to kind of put that together. There are a lot of breaks in that process, and so kind of bringing that knowledge which we learned in the process to work for the customer are some of the simple things which we did. India is a digital plus physical economy, right? And so kind of making sure that what you're trying to solve for has those components. And it's also a fair statement, I think, to say that a lot of products which are out there, which are serving needs for the Indian customers, right, were not, some of them maybe have created in India, but all were created to serve the Western customers. Now, you would agree that, I mean, each economy, each user type, each business process has its own nuances. I mean, and if you are carefully looking at the detail, you will find those, and you will be able to solve them better than the others. And I think that's what happened.
So, Nilesh, let alone 10 years ago, even today, I tell you, almost every SaaS company that I see believes there's no market in India. Almost every SaaS company that I see believes that there's no market in India, and they want to get to the US market because ARPU is higher. Blah 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 blah. You know the drill better. Um, but you bucked the trend first of all against naysayers, but somewhere you had the conviction, and even today, I think you have a very large customer base in India and a significant portion of your revenue, 80-90%, perhaps, I'm not sure how much, comes from India. So, to have the courage and conviction to build an India company, let forget the people who say no or whatever, but how did you find the courage and conviction to believe in the Indian market?
I I think the category is big. Like that is true. Like that just is just a reality, right? And India is a growing economy. That was evident 10 years ago also, and it is of course truer now. Those are the two things I thought, and I continue to believe, that is will allow us to build a large and scaled business in India, because the size is there. Now the size is not evident, unfortunately, in reports as we would like to see mostly, right? But the fact that it exists and the digital accelerated the adoption. I'll probably bring a couple of other points which might help. Like, I mean, there were other things which are coming together in the software ecosystem which will allow software to be sold and bought in India. For example, if you see the wages, right? Wages have gone up substantially in last 10, 12, 15 years, right? Which means the cost of software in relation to wages is much, much lower than it was earlier, right? Now, it is not, so the ability to automate and do things, with software will be accepted phenomena, and that is also important driver in my view, right? And continue to be will in future as well. So I think the size is there. It is just harder to discover the size of the market, because if you just look at, there are only X number of banks, Y number of insurance companies, and Z number of, like, if you start by that, not necessarily. But if you kind of go below and see the lot of mid-market businesses, the harder part is distribution in India. And I'm sure you would have your experience and seeing on your side, right? So I think, for certain type of products, especially which are broader, serve the broader market, like CRM being a larger category, I think there are businesses to be built. Now, if you're very, very specific, very, very specialized product, right, maybe the answer is no, for India. But for our category, it didn't appear that that will be true. Also, another reference point, to look at is if SAP, not that I know their numbers for sure, but I recall talking to some people. I mean, it was 300 $400 million business, 7 8 years ago. Whether it is still true or not, I'm sure it is much, much bigger now. I mean, if a Western company has a 300 $400 million business, I mean, you don't have to worry about the size of the market then, right? Like, it is there. Now you have to figure out whether you can win or not. I think, so that was the question rather than the market size, in my view. Of course, 20 players cannot exist, 30 players may not exist, but there is space for some companies to exist.
Are there different sales strategies and go to market strategies for India versus when you go to other markets?
I mean, I learned the first one more, so I'm trying to figure out the other one. But I think that is different. I mean, it'll be different for different markets, right? I mean, India itself is a comprised of multiple region types, multiple buyer group types, right? I mean, different segments buy differently. I think the ability to serve them, and give them the comfort that you can solve their problems, I think, requires a different mindset. That's all. I mean, there's nothing different. Like, I think Indian customers are fairly welcoming, as well, especially after what has happened in the software space over the last 10 12 years. I mean, a lot of incubation, like there are a bunch of things which has happened. It is very welcoming ecosystem now as compared to maybe 15 years ago. And I think, the strategies are different, but those are all unique to every market. nothing different as such in India. But I mean, you have to get access to the customer. It's the same thing, just played differently.
So, Nilesh, let's talk about investors, the bane for all founders. At times, it feels that way from you know the comments and questions I get. But and you faced your own set of challenges that way. It was 2011. SaaS wasn't SaaS for India wasn't sort of the hot topic, and you raised actually very little money. I know you raised money more recently, but for the size of your company, you raised very little money. And so, what would you, from your experience, first summarize your experience with this and your thought process? But what would you offer for other founders as a framework of how they should think about investor access, funding, and setbacks in their journey?
Uh, yeah. Look, I mean, I think getting your point across in conversation is always harder, whether it is investor conversation or any other conversation. I mean, it's not necessarily always easy. I think the most of the times it's easier to follow a template, right? And The fact that US is a mother of all software markets, and if you're able to build a business here, it solves for a lot of problems which investors have to worry about, which is not only just entering the company, but how can I exit the company, right? So I think the the fact that Indian market, the size of the market, not enough proof points of companies doing in the market, and ability to answer questions around how or why can you compete with other players when so many other exist. I think finding credible answers to those questions was a process for me and our company to learn, right? So not that every question was answered in advance. And then what I've come to now learn after many years is that you know investors also work on thesis, like they have some ideas on how they think, where they have a point of view. And if you are not necessarily always in that point of view, it's okay. I mean, they have a certain way of where they think the market will evolve. And I think that's the you just have to accept it. Like, I mean, there is nothing to get frustrated about it, right? You just kind of go on and keep doing what you're doing. So I think that would be my, I mean, I won't say any recommendation or whatever. I mean, I think it's just a reality that investors cannot work without a point of view. Like, I mean, that's important, right? Like, they cannot just wake up in the morning and say, now I'm going to invest in this or that, right? So they have a point of view, and you have to respect that, and just find a way to. And also storytelling, with data and facts, is also equally important. That is the work for the entrepreneur to do, and creating those proof points. And I think that is what I would say, is what one should think about, right? I mean, is basically, can you systematically arrange your story with facts, and I couldn't do it. So let's just say that I couldn't do a good job there. But the good news was, what was working was we were able to continue to grow the business. So that was giving comfort to say, well, maybe it's too early to be invested. Like, maybe the business is not investable at this stage, and there's nothing to be frustrated about that, right? I mean, because raising capital is not the goal. That's just not the goal. So I think that realization also helps, and helped me in our company.
So let's talk about that. Raising money from investors is not the goal of the company. But to talk about that, let's sort of talk about the three of you as founders, right? Again, uh, uh, how do you decide who's the right co-founder? What works, what doesn't work, from your experience in terms of how you look for that right co-founders? And uh, and because together you set the goals of what metrics matter for your business. Funding is a means to the end, not the end itself, like you said, but I think the collective co-founders set the DNA. So, how did you decide on the co-founders, and how did you define collectively what you want as the DNA of your company, what you measure, what you care about?
So lucky enough, I mean, me and our co-founder colleague, this is the second company for us, together, and we started the first one in 2003. So we had a long history of working together. So it was not a question of who we will start with. We were clear how, I mean, who all will start. Right? So I think that question never was there. We all just, started basically, and we had a certain cultural alignment among us, and we continue to just follow that, and get along in that fashion. So that challenge we did not face, because we were lucky. We had we worked together, and I've known my co-founder colleagues for more than 20 years. So like it was not that, now I would say 20 years, so then 10, 12 years. So that question was not there, and I know it's a difficult question for most founders who start afresh, but for me, it was, and for my co-founding team, all of us, that was not a big question. So that was a lucky moment, I would say, that we didn't have to go through that difficult part. And I think actually it can be very, very difficult. I have seen stories, and so it can be very difficult.
So, how did you decide in the beginning, and over years, how has that changed on what you track, what matters? You have some fantastic metrics as a business, but how did you arrive at what matters to your business?
So, I mean, growth was an important criteria. So we have to continue to grow and advance our customers, number of customers we had. That was one simple metric we followed. Second, because we're not a funded company, we raised capital from friends and family, and smaller groups. So we were particular about cash flows. So we were very sort of, we're trying to work through that process. So we had a decent thinking around that, and we just kept following that. Third was, the adoption of the software, right? Like continue to focus on that so that it continues to deliver value. I think we improved over time. In the beginning, we were not very, very particular or good about that, but over the years, we've started to do a better job, I would think, in that area. And I think that, and from adoption, then comes many metrics, around that. But fundamentally, in each area, then you kind of break it down. So like if you are talking, customer acquisition, then all kinds of metric around, how many meetings you're having every week, what percentage of that are converting moving forward in the funnel, and like kind of some of those things. But fundamentally, if I were to look at, are we growing our existing customers? Are we getting enough customers in the door? Is our software being used well? Is cash moving fast enough in the ecosystem, getting in the ecosystem? I think these are some of the basic things I used to see then and continue to see now.
So, Nilesh, you seem to have quite a few of your users in this call, and and many of them have put a comment that they love your product. So, maybe you want to shout out, and how do you track customer love, since the product seems to have created that. So, how do you measure customer satisfaction?
I think customer satisfaction really is shown up in numbers. Can you renew enough of them or not?
Yeah.
And I think that's the barometer. But beyond that, I mean, there are, our services teams, keep track of, bunch of things. But fundamentally, there are some NPS we do, at the product level to see, wherever it is going down, product teams will get on a call, talk to people, the users, to see what's going on. I mean, basically the usage is where the biggest focus is. And in our case, implementation of our software is equally critical, how it gets into the customer's ecosystem, right? And so there is enough focus there to see, are we going in, or do we understand what the customer needs are? and making sure our product is tailored for for those needs. So some of that is just kind of a lot of grind at different teams level. But I mean, I still should add that there's a lot in every area we can improve. So not that we have perfected all of that, but some of these things we continue to sort of drive and do at the company. Simple things, I would say, but it takes a lot of work to just get simple things across the board.
Nilesh, how has your personal role as a founder shifted from when you started to today, right? And I say that also in the context of there are so many uh, uh, threats to a business or opportunities to a business, right? And there is also the daily execution that is required. So, finding that balance of the future and today, your role as a founder over the years also, how has that shaped?
I think as the company grows, getting uh, getting the right set of colleagues to work with, um, who can execute on matters you would otherwise do it yourself, is super important. And you can only grow if you can do that part really well, as a company. And I think to some degree, earlier I was continue to do because so first let me say we were three founder companies. So a lot of was good for us because we had worked together. So like each was able to contribute and drive their respective areas well. So we didn't have to sort of it was not like one person trying to do everything. So that was not the case for us, right? So that was we were in a good spot there. But over time, I think over time, uh, the work gets shifted from looking at some of the things yourself to finding somebody who looks on your behalf. And that continues to happen now as well, at different levels now, right? I mean, some things you are doing yourself, like for example, long back I would even be looking at ad copies of what ad we will write, but then not anymore, right? I mean, and not so I left that many years ago, of course. So I think that you get the right colleagues in place. And the second part is how does uh, I think the harder part is you start something, you start teams, and then whether those are scaling on their own or not, like kind of looking at that, also something, because it's not like you install it and it just works. So just the how the groups interact with each other, in the cohesive way to sort of move forward, can also be a day-to-day work, to some degree, right? So the work shifts from doing the work directly to let's just say making decisions, certain decisions, by you know by not having all the information, let's just say that. And then you rely on others to drive some of the decision making, and then kind of do retrospective in terms of whether all the decisions were done right and what would we have done better. I don't know if I'm even making sense right now, but 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 some of that continues to happen even today.
So, no, it makes total sense for me at least. And because I think one of the, of course, big topics today everywhere is around board governance, and it's, uh, small companies to large company. I was going to say OpenAI. They're a large company from valuation, may or may not be from revenue yet, but nonetheless, right? And you're shocked sometimes at the scale and scope of mistakes that can happen there, right? If OpenAI is any example of that. But I think how you set these things up from the beginning can give you certain buffers. There is no 100% protection, can give you certain buffers. But when you start as a founder, you have a wide knowledge gap on what is it that you should do. And your natural inclination is not to think about systems, processes, governance, what will work at scale, and more importantly, what will break at scale, right? And a lot of times, as a founder, maybe there's also a little bit of hubris. You don't want to really listen, also. I'm not saying you, but I mean, at times, that's a natural part of the growing up angst. But all of that is the bundle where you have to emerge with the right balance, right? So talk to me about that process. How did you think of board? How did you think of the right, uh, I don't want to call them controls, though they are, they just means the guardrails for the business, how you run the business, right? uh, so did it all just happen happenstance? Were you deliberate and intentional about it? Again, what are the guiding principles you used and other founders could consider?
So, as I said, the benefit we got was that we worked together in a prior company and built that company, and so we there was certain working methodology which was sort of which was there among the founding group, right? And one of the things which we have uh, you know uh, our business unfortunately did not raise a lot of capital, unfortunately, or rather, looking back, it didn't raise a lot of capital. So we
Yeah.
didn't have some of those questions upfront coming to us. And one of the things actually we did really well, I would think, or some people did say to us, is that every quarter, even though we raised a little capital from some of the individuals, but there was a big capital then. We kept sending a quarterly summary of what the business was doing to everybody, just to kind of keep everybody informed. So I think that because there was nothing to hide, so it was just to present, right? Of course, when the business grew, and then we, we worked with larger investors, we can't do that anymore. But we were happy to share how the progress was happening in the business, and so there was that level of transparency and accountability on our own on and answering those questions to investors who are who could be friends about how we're doing. That there was simple things we did, and there was basically the basic metrics we all were agreed upon, and we will share that. So there was nothing to sort of I won't say hide, but there was nothing there to which was sort of under the table. Whatever we didn't know, somebody else won't know, of course. But what we knew, which were, and people have the basic questions about the business, and if you're just if you just share that with reasonable transparency. I know you can't do everything, but with reasonable transparency, I think people get confidence about how you're doing things, and that just that presentation helps people understand that how the business is doing. And we followed some practices, so the best practices which we learned from reading other people, talking, and especially I'm talking about the financials of the company, right? Like, people report things. Sometimes entrepreneurs unfortunately do not know how to even report a certain, and we were lucky that we were working with the same accounting firm we were working earlier, so like they knew. And so, like, what was helpful honestly was that a lot of the playbooks were not invented. We just kept using what we were doing earlier
Mm,
on some of these things, and that was helpful. So there was not enough thought, I would say, was gone in particular.
mm,
The fact that the SaaS businesses have to recognize revenue differently, like, all of that was understood very early for
mm,
us. And
mm,
also it also came in investor conversations too, right? Like, when you talk to people, somebody will ask that question, right? And so it was a reaffirmation that, okay, we are doing right, and all of that. So I think that just it happened. And our business, unlike many, some, I wouldn't say many, unlike some businesses who grow really really fast, right?
mm,
Our business did not, like, it was growing close to 100% every year. So it was not like it was growing 500% a year. So some of those things we never saw. And so I think maybe that did not, we didn't see a different kind of problem, I would say. So
mm.
that it was more routine, things which were kind of happening in the business.
So, Nilesh, the other point in the kind of journey, 10 years, very structured growth, exciting growth, but still very structured growth that you went through. Uh, do you, and many times businesses go through pivots But people have a misunderstanding pivot means somehow doing a sharp 180-degree turn. It's just course correcting the decisions. Is there anything that stands out as decisive movements, because we learn from the decisive movements, right, that you can share with us here?
So I think the when we started, I mean, our product had both marketing and sales and couple other components, right? I think as the business, to your earlier point, right, on was there a large enough market in India, and that was actually a question for us also. Not that I should say that I always believed it'll be large market. I mean that question begets you every time you think about it, right? So I think once uh, it was understood that with high degree of conviction that there are enough and more customers in this country in India. Uh, at that point, the path was more certain. It was a question of now execution and getting it right. I would say. So because when you start, you try to do a couple of things to say, does this work? Does that work? But as our thesis around businesses who sell to consumers and need a system that that clarity emerged, that there is a large enough market and there are enough and more buyers. I think then the certainty, more certainty was there, so we were able to just kind of march forward in that direction versus trying to do two or three things on the side, right? So we had like two or three major features in the product, so we started focusing on one which is mostly the sales use cases, more than other use cases, and that's where. So I would not really call it pivot, I would just call it focusing in area which was working. We started with like couple of them, but then you know, went and pushed one forward more than the other.
So, Nilesh, if we can take a few minutes to discuss pricing strategy. Early on, today it's very different. You have pricing power, you have customers, you have, a lot of things. But early on, one of the things classic that founders do is give away the product, huh? And or underprice the product. So, how did you think about pricing strategy for your product?
So one was we could not do this free trial, free plan thing. I was just not, and we did some limited free trials in the beginning, but then over time we have curtailed that and really do limited free trials now also. So I think we were not in that free camp in the begin from the beginning itself. Why? Because it's just harder to get somebody live. And we were small companies, so resources were limited. So we were trying to focus in our energies in areas where we can be more effective. And so free was not what we were very in the beginning itself. On question of pricing in terms of even if it's not free, what it is worth, right? I think given we are in a market where there is anchoring, which already has already happened in the pricing. I think for us it was mostly to see uh, what value a customer will add to our business, and what can we do for them, and at what price point can we actually serve them. Like some of those were the business calls, and in India you start at you won't start at the top end of the pricing because the anchoring is already there. It was not like a new market from a pricing standpoint. And I think that we just followed the and found our way in. So if there was situation where we had to offer our product at lower price, and there were many of them, we chose where we can and we refused business where we couldn't. And I think we started from there, and focused on finding the value for both us and the customer, in terms of whether we can serve them, if we can. And again, we had made mistakes there too. I would not say that we always right. I think one thing we did, we were lucky, was that sometimes when you have a larger customers and the users move from one place to another, so that familiarity also helped us. And that also there was a pricing context set, so like people would just come and buy, and so on pricing, I think there was flexibility was there, I would say. Especially if you're selling in India, some degree of flexibility is going to be very helpful in advancing the sale, because you know people buy differently, have different ways to purchase, come with a certain notion. Negotiation is critical in India, and so if you just kind of work through that process, you will find a way out, basically.
So, a hypothetical question, somewhat, Nilesh. So, it's a decade later, and from when you started, and India is a different market. So, for founders who are starting today, if you were to be, here is the hypothetical part, be on their board, what would you advise them? What are some things that aspiring founders should take away from here about building their companies in SaaS, whether it's for India or global?
So, Vani, I mean, we operate in the application space today, right? I mean, I think what I have come to believe is that you build technology and it is applied differently at different places. So, depending on what the company is all about, it's a pure tech company. When I say pure, meaning let's say security company, or like I'm just like deep tech companies. I don't understand them that well, so hard to suggest. But if you are in the application space, I think whatever technology is created, if it can be applied differently in different situations, it gives you the flexibility to move across markets, right? So I think that would be interesting to so if you are fixated only in certain geography and have the product only works in a certain geography, then it will be more limiting to sort of have. But if the product can actually scale, when I say scale, not necessarily in the terms of how many people use it, but more like, can it scale across market A to market B to market C? And because each product can be applied differently in different markets, I think that is an important thing. If you can achieve that in the product, I think it'll create optionality for the products and it can be taken in different places. I think that would be my suggestion. So technology is fundamental, but then the way it is applied can be different, and so that flexibility is available. uh, you know some things will work, some things will not work, and you have the flexibility to kind of switch, move, go to next place easily. Would be what how I would think of it again if I were to do it.
Nilesh, I think what you have done in building LeadSquared to the scale and success that you have in India, I think inspires many many more founders to follow. I think sometimes when a path is carved out, it opens up for others to consider the possibility. So, really, uh, you know, we always take collectively pride in others' success. So, really proud of your success, though I haven't done anything to contribute to it, but can feel good about every entrepreneur succeeding because it opens doorways for so many others. So, but thank you for taking the time today and sharing what you have done right over the last decade, and wishing you that much more success for the next decade in a more accelerated pace. And I'll let you have the last word in closing this conversation with the many aspiring founders who have joined this.
Yeah, first of all, thank you, Ani, for bringing me here. Appreciate the opportunity. And really thank all the starting from the people who helped contributed to build the business. I think uh, it is such a fundamentally people have helped us, all the people who are now with the company or were part of the journey prior to now, and all our customers who are amazingly supportive, and also forgiving for the mistakes we might have made, over the journey. And I think those two have been, fundamental, and a lot, kudos to and thanks to our investors, early investors, I would say, who were willing to take that bet, and in the first 5, 6, 7 years of the company, I I think all of that would not have been possible. Where we are has been a huge support, and very lucky, as I said earlier, to be here.
Thank you, everyone, for joining. And uh, Nilesh, I hope you get some sleep. You started very, very early today with us. Appreciate that.
Thank you so much, Vani.